Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to a very brand new episode of Markets Tomorrow, the daily market analysis show where we look at what happened in the market today and how we can plan for a better trade tomorrow. And this is the first daily market analysis for the year 2022. So, wish you all a very happy new year. So if you're not subscribed, please subscribe and share to your friends and colleagues so that it helps all of us. Thank you. What a market it was. The bulls were roaring today, right? The bulls hits back hard, right? So without wasting time, let's get into and see what exactly happened. So this is analysis for tomorrow, January 4th, Tuesday 2022. So we'll be doing the pre-market analysis based on all of these parameters that you see on the left side. We'll have additional data analysis and we'll look at all of this that you see on the right side also. We'll wrap up with some actionables as well. So without wasting time, let's get into the charts. So this is the Nifty charts that you see and this is the Bank Nifty. Look at the candle size. It's a wide range, clear bullish gap up candle, right? Pro gap. You can see there is a gap, right? Almost it's not a normal window gap, it's a pro gap, you can say. Here also it's a gap up, wide range on the Bank Nifty also, right? All the gaps filled, right? All the resistance is thrown out. So what kind of move was that? 272 points, 1.57% of own Nifty, wide range bullish candle. And the main thing is there was a price action of lower low and lower high. So this previous swing high was taken away today, right? But it closed below that, but yeah, that was taken out. That's the main thing that happened on the Nifty here, indicating clear bullishness ahead. No probability of clear bullishness ahead. Bank Nifty similarly, there was a moving average here 20, and that was taken out clearly today. So that's the price action. And Bank Nifty, how much did it move? 940 points. That's 2.65%. Big move, wide range bullishness, right? 20-day moving average taken intraday. If you look at this, is what happened. It gapped up and it was trending up move, right? There's hardly any down move, only just one candle in the 15 minutes you can see down move. That too just half an hour before that, but otherwise it was trending up, trending. Bank Nifty also, no, so that means there was no real pullback. It was straight away trending up move market that happened. That is a price action today. Now look at the Bollinger Band change, right? Bollinger Band, clearly both the bands are sideways and the upper band is actually moving up. That means volatility is likely to expand on the upside now on the Nifty. Bank Nifty, you can see that the bearishness, the lower band which was bearish and expanding, now it has turned slightly on the sideways, upper band also sideways. So Bank Nifty, the first time it is showing that there is a probability of consolidation. Nifty is already showing, now it is showing bullishness also on the Bollinger Bands, volatility expansion on the upside. Now the main thing is the 20 moving, the median of the Bollinger Bands was already clearly taken up in Nifty long back, but today was the first time that 20 moving average on the Bank Nifty was also taken out, indicating all Bollinger Bands saying that there is, right, there is definitely not going to be a immediate down movement. Consolidation may be the thing, right? But whether that consolidation would turn out to be bullish or not, we'll have to check. Right? Make a note of the support and resistance levels, right? Look at the up move. So this is a 7% of up move that is happening here. So right now what you see here is so this is at a resistance zone. It's 17,500 to 17,600, 650. That zone. Exactly where it is now. Now the first resistance on the upside is 17,800 and 850. And after that you have the 17,950, 18,000 rounding number level. Right. That's the resistance on the upside. On the Nifty downside, if you see 17,250, 400. That range is going to be the support first. After that 7,200, 300. Then 17,000. The support below that 16,900 and 16,700, 750. That's the support zones. Look at the Bank Nifty support and resistance levels. Resistance right now 36,300 to 36,700, which is Fibonacci 38 levels. and that's where the first resistance is. After that, you would see the 37,000 kind of levels, next resistance, right? And after that, 37,300, 400 levels, and after that, 37,700 to 37,800 that levels. Downside, first support can be seen at 35,000 to 35,300, which is Fibonacci 50 level, and below that you have 34,350 to 34,750 that level. If that's broken, then you go back to 34,000 kind of levels, which is the previous swing low. So those are the support and resistance levels for the indices. Momentum divergence, if you see, right, the momentum is on the edge of bullishness. You can say it's almost confirmed that it's bullishness, but you know, just below the 60 RSI, right? We consider 60 as a point as a band level, but it's almost there, 59.65 or something, right? Bank Nifty, it's still it has turned sideways, right? It was bearish still recently. Last 2 days, it has turned to be in the sideways, and it is rising up above the moving average of the RSI, right? So clear momentum bullishness can be seen. Momentum has picked up, and there was a 15 bar divergence, reverse divergence of momentum, which was bullish in nature, and it exactly met the full target of the divergence setup. But the Bank Nifty, it still has to go till 37,000 at least for the target to be met. So there is still work in progress, but here the target is met on the momentums. Now the Nifty also has got a monthly momentum reverse bullish divergence, which is also bullish in nature. Medium term, the momentum is in the sideways as well for both the indices, right? So that's about the momentum and the divergences. And the trend indicator IDX, if you're looking at, it has done a crossover on both the indices, right? A crossover, so DMI positive is dominating, so that means the trend has turned bullish on the short term. Medium term, it is still bearish as far as the trend is indicated. And you can see that, yeah, the green is a strength, right? The strength has to rise up. Strength is now down, indicating that although it is bullish, the bullishness is not with heavy strength. So watch out for this green thing to move up if you are expecting the market to trend to increase. Right now it is down because it just crossed over today on the Bank Nifty and yesterday in the Nifty. Right, so the trend is in the short term has turned bullish. So that was the thing, no, on both the indices. Bank Nifty is not happening. Only Nifty is happening much earlier. So and just caught up with that. Volatility India VIX, if you see, it was flat. Hardly 1.5% of 16.45 is where it is. Implied volatility 16.27, and IBP is still near the 50 that range. So 50 to 20 is the level that is being maintained. So anything above 20 is not good. Below 15 is going to be a change in the volatility pattern. Right? So right now it has been maintaining that for several months now, 15 to 20 range. Okay? Same thing today also. Hardly any movement, but remember that it's in the lower band level. So there could be a chance of a spike up of the VIX that can happen because of the mean rotating nature. But when that happens, how long it will stay flat like this in the same 15-20 zones, we do not know, right? Open interest analysis. Next one is for the expiry, that is for January 6th, 2021. What is happening? You can see that the put build up that has happened today. Huge put builds. Bank Nifty also. Huge. The people have turned clearly bullish. You can see that, right? Right. So a lot of unwinding of the call also has happened on the Nifty as well as Bank Nifty. Unwinding of the calls and addition of puts, right? So Nifty, if you see, right now it is at 17,650 kind of levels, right? But the highest put rating for the next expiry is happening Thursday. It's quite below. It's at 17,300. That means, and after that it has got 17,500 also. That means even though the market is its higher level, people are thinking that it for this expiry it may come down to 7,500 or 7,300. More people are thinking that it is 17,300. So we'll have to wait and watch whether this 300 is moving from the highest to 500 or 500 is moving ahead or not in the coming days. But right now, this is something that you be cautious. Market has moved much ahead of where the openness data levels are showing. Similarly, in the Bank Nifty, you can see that similarly in the upside, resistance is very far away. It's at 18. So a lot of fighters still think that another there is scope for another 300-400 points. That's why they are writing calls more here. And 7900 also has got good resistance on the upside. Put correlation 1.5 is clearly bullish. Long build up is what you see in the futures operator static. Bank Nifty on the right side, 35,000 is where the highest. Right now it is much ahead of that. It is similar to the Nifty. The levels, that is where the highest support is below the current levels. That means market could pull back a little bit, is what the option and writers are thinking. So that even though 34,000 also has got good support, good put rating, that is there. So call rating is quite far, right? 36, it's close to where it is right now. 36 500 has got good resistance. That means this level where it is currently hovering, that there is going to be some resistance out there. It has to be taken out. 38,000 is quite far from where it is, 2,000 points away. Still people think that the market could rally up there also. So option writers, some no option sellers on the call side have written it for at 30,000 levels. Put correlation is 1.36 is bullish. Long build up is what you see in Bank Nifty also on the futures data. Look at the green all around, right? It was HDFC that did the job and the ICICI Bank. Bajaj Finance and Bajaj Finserv, all this just beaten down, has recovered and then performed. Banks have done very well, right? So Lands and TCS also. But the Infosys, the IT pack did not do that great except TCS. Yeah, but overall there is a lot of green bullish heat map is what you see here. The sectoral performance, if you see, almost all the sectors performed except pharma, slightly 0.5% down, but all sectors are up. 1% IT, 2% metal, 1.5% auto, FMCG almost flat, realty 1.1%. So pharma and FMCG didn't do well. IT, all other sectors did well, but momentumized bullishness can be clearly seen in IT and the pharma only on the short term. So these two stocks can to be eligible to pick up cautiously bullish. Right? Those you'll have to wait for the short term and the daily momentum to catch up to the bullish zones before you can have a top-down approach of shortlisting the stocks from the sectors. Now look at the institutional participation here today. Finally, the Fyers have turned to be buyers. Right? 902 crores of buying has happened in the cash, and they has also did the buying. It's the reason why market is shot up so much, trending upside. Right? Probably it's a new financial year that is there for the Fyers, and the buying and the restructuring has happened, and all the selling was to book profits of the previous financial year. Is what we'll have to assume, since we saw 30 to 31 or 30 days of continuous selling without hardly any layoffs. Buying, that's what happened in the bank. That's what happened by the FIS in the last 2 months. But you're seeing a green, a good buy today for the first time. The new first day of the new year, and hope this continues. Look at the dollar index on the right side. It's still consolidating and it is going down actually after breaking out from the zone, and then USD currency pair, if you see, it has been dipping since almost 2.5 rupees, and then now finally it has settled at the very old support zone from where it had broken out earlier to reach the 76 kind of levels, right? So now it is cooled off to 74, and then probably may be consolidating for quite some time here. It may not, it's less likely that it will go down from here, but the momentum is very bearish if you see on a short term. So that's the rupee that has strengthened a lot in the last two weeks. Crude oil also has hit the resistance zone and then has shown some red, indicate that it's rather consolidated here, or that could dip further back to cool off, right? But right now it is at a high level only, 75 plus, right? Hope it doesn't go beyond the 77 kind of levels to the upside, right? It may be consolidating mostly. Dollar was trying to break out from the resistance zone, got stuck, and then you see a red here on the dollar today also. Global markets, if you see, no big moves can be seen as of now. Dow Jones was flat or slightly down yesterday. and Nasdaq and S&P 500 and the US markets. And the UK and the European markets are showing nothing significant except DAX is showing some 200 points up move. But all this exchange data has to be seen tomorrow. If there is any substantial big moves on either side that has happened in any of this, right? Then obviously it will reflect in the SGX, and then that could give us a clue on what the market opening can happen. That's all. After that, it's up to the NSE market to decide on how it performs. But the opening clearly depends on if there is any big moves on the global markets of any of these. So you have to check that in the pre-market set. Two actionables, Birla Soft and then GMR Infrastructure. Clear bullishness. Look at the huge volumes above the moving average of the volumes. Momentum is clearly bullish above the moving average, and trend is also bullish. Price pattern, some kind of box breakout, rectangular or wedge kind of breakout that has happened and is continuing in the candle today. Last one is clearly wide range bullish. That's the loss of IT sector also is clearly doing this kind of a mid cap or mid cap stock. Very few mid cap performing stocks are there, and this is one of the top. And this can be a good swing trade basically. EML infrastructure reality is doing good, and there's also a consolidation box, and it seems to be breaking out with very good excellent volumes. Look at the volumes and the momentum, and this is kind of having a momentum range shift. That means it is clearly done the job in the sideways and then trying to settle and then bounce up from the 60 support of the RSI, which is very bullish. Trend indicators also is bullish. So two actionables, GMR infrastructure and Philosopht. Now this is a wrap up of the price action of the Nifty on the left side and BANKNIFTY, just to summarize before we wrap up. So you can see it is a gap up and it has taken out the previous swing high, which could potentially move upside as per the price action. Here also the 20 moving average that was there is taken out today clearly, and now the next thing would be to take out this 37,500 levels for the price action. Previous swing high also to be taken out on the BANKNIFTY, right? Now wrap up. Short term for tomorrow, the view is moderate bullish. Reasons, of course, the support and resistance levels and the patterns are clearly showing there is bullishness. Momentum has improved drastically. Bearishness, this is a mistake. The bearish trend has actually now taken a pause and then just done with the bearishness, and now trend has turned to the bullish ones, the short term. And institutional selling also has taken a pause. Now it is a 7.5% of recovery that has happened after 12% dip from the up move. So that's a very decent recovery that has happened. And BANKNIFTY, which was lagging behind, has now gained the momentum and is clearly indicating the support of the Nifty. VIX is still in the 15-20 range. This line, just ignore low volumes, and last week of the month was a repetition of the last slide. Please ignore that, right? But 15-20 is the range. So anything above 20, you have to worry. Anything between that range will have the similar volatility of how it was happening in the last several days. It is still almost 1,000 points away from the previous 18,800 levels, all-time high, right? So you still could have good quality stocks that is at a reasonable price, which can be picked for long-term investment. Another word of caution is that we have seen a good price action of 7.5% of recovery that happened. But it's on the edge, as you can see here. It's on the edge. It has just taken out this. There's no confirmation, right? There are many possibilities that it can give a false breakout. It can move up and then suddenly reverse all the way back to this support zone. All this can happen. Right? It has happened. So you have to be cautious on that because it's at an edge. Reversal is because the price action continuation may not happen. It could be a false breakout. It's possible. So always have tight stop loss and use spreads and you're playing with the options, right? Because all the people will be expecting some kind of breakout to happen on both, but eventually, as the Bollinger Band indicates, it may end up in a consolidation. Consolidation would mean that it can dip, but it will take the support somewhere here and then again hover around this range, right? It's just that the bearishness has ended post for some time on the Nifty, especially. And Nifty, it is the beginning of the pause, right? And candlestick patterns, price actions, clear bullishness is there, but I'm just telling that the Since a 7.5% recovery has happened, the market may think of doing some amount of breathing, pause before it takes the further energy to move further up. So that can happen. So reversal from here, or a false breakout, or a consolidation, all can happen instead of everyone expecting breakout. That may not happen always. So you have to be cautious on that. When you're entering long, you need some kind of price action confirmation before you go long heavily, or you'll have to go ahead and steps. So that's a view. The moderate bullish view is what my short-term view is of. So if this helps you, this video helps you in any way in forming your view for the market for the next few days or next tomorrow, and helps you to plan your trades, then consider hitting the like button. Okay. Thanks a lot, and thanks for watching. Happy trading and happy learning. Bye.